guys are, of course, here at Phillips Financial. We're really excited to be kind of the newer advisors on your 401k plan. So today we're going to talk a little bit about some of the upcoming changes. We've got some fund changes. We've got some plan changes. And then we want to talk a little bit kind of education, just investing in general, and give you a little bit about our company. There we go. So Phillips Financial, we are obviously a Fort Wayne-based company, but founded here in Fort Wayne in 1949. We're a registered investment advisor. So what that means is we provide guidance, advice. That is our services to you. We are kind of your advocate. We are a fiduciary on your 401k plan. So it's really kind of our job to monitor the plan, make sure we've got a prudent selection of funds, and just be kind of your advocate for everything 401k related. Our firm as a whole has over 2.1 billion of assets under advisement. So at Phillips Financial, we have a whole team of advisors that work directly with individuals for, wealth management, financial planning. And then my office, we kind of work on we call it the qualified plan team or retirement plan. So we work with businesses. And as far as your team for the 401k plan, there's really 4 of us. You've got 3 of us in the room right now. So again, I'm Erin. I'm one of the advisors. We've got Chad Birch in the back. He's also one of our advisors. So between he and I, if there's ever any questions that are market related, I don't know if I'm investing correctly. Am I on track? What more should I be doing to maximize the plan? I'm freaking out about the stock market. Those are questions that you can drive to our attention. We also have Christine Straub in our office, and Marissa Meadows is sitting in here with us. They are kind of our retirement plan specialists, so they can help with distribution questions, account access, beneficiary changes. They can also get you in contact with us if we're kind of out and about, and they're typically a little bit in the office more often. We can make sure you guys get everything that you need covered. So we came on as advisors with Petroleum Traders really in early January. And our job as the advisors to kind of really review the plan, look at the funds, look at the fees, talk with the HR individuals to understand what does everybody like about the plan, what changes, were on their wish list. And we really determined that although you guys, have had a great relationship with Empower, who's the current record keeper, Empower and Future Plan are kind of the current service providers on the retirement plan, we have identified that a company called Epic Retirement Plan Services would be better suited overall for the plan. So we are looking to move the plan around July 1st over to Epic. So we're going to talk a little bit about kind of how that works and what big changes you guys will see. So number one, in July or later, and I say later because we don't have a confirmed date. So that's kind of still up in the air, but we'll make sure you guys have the communications when those dates are finalized. But at that point, when the plan transitions, you're going to have a completely different website to go to. So you'll go to the Epic site instead of the Empower site. You'll have a different mobile app. Maybe just kind of for my benefit, show of hands, how many of you have logged into your Empower account? Whether it's on the website or the app. Okay, so quite a few of you, which is great. We're going to kind of push you to the Epic site once that's up and running. Epic is a company that our company is actually utilizing for our 401k plan as well. So as participants, we see it from kind of the participant standpoint. We see it from the plan advisor standpoint as well. We love Epic. I think you guys are going to love it as well. Some of the big changes that will be coming with Epic are we're going to kind of push everything to be as paperless as possible. So I think right now, a lot of what you guys do 401k related has a lot of paper involved. You're changing your deferrals via paper, or you're sending an email. It sounds like you're kind of working manually on that with your HR team. If you're looking to take a distribution or make a beneficiary change, that's all paper form. We're going to take paper out of the equation and make it all online, which I know some people will love and some people will hate. So as far as your deferrals, when you want to increase your deferral or decrease your deferral, so what you're contributing to the plan, or if you're doing a pre-tax contribution or deferral and you want to flip that to Roth or vice versa, we're going to push you to the website or to the mobile app to do that. Our office can do it for you as well with our access. So if you're an individual that says, I just don't want to go online to do it, I don't want to use the mobile app, I want somebody to help me through it, you can reach out to us and we can make those changes. And when those deferral changes are done on the website, that kind of feeds that data over to your HR team, and then they'll update that from a payroll standpoint within a couple pay periods. As far as your quarterly statements, right now with Empower, You guys might still be getting paper statements. Some of you might be getting e-statements with Empower. Just kind of depends on how they push that through for you. But with Epic, everybody by default is going to be set to getting e-statements, which means you're going to go to the website to download the statement, or you can go to the website or the mobile app and kind of look at your balance on a daily basis if you're not too worried about those quarterly statements. If you're an individual that says, nope, I really need that paper statement, we can set you up to get paper statements with Epic. It's not that that's not an option. You're just all going to be defaulted to e-statements right from the get-go. As far as beneficiary, all of you hopefully have a beneficiary on file. When you signed up for the plan originally, you would have filled out enrollment paperwork. You would have included your beneficiary information, or maybe you've changed that and you filled out a beneficiary form. That will remain active for you. However, any beneficiary changes, we want to drive that to the website. So kind of the chain of command, if something were to happen in the event of your death, we're first going to look on the website. We're going to see if there's a beneficiary. If there's nothing on file, then we're going to look in the paper forms that your HR team has, and that's what will be used. So you don't have to go load your beneficiary onto the website. We would like for you to. We'd like to kind of get everybody to have a electronic beneficiary, but that's not required. So in the future, if you're needing to change your beneficiary, we are going to push you to the web. If you're not going to make a change to your beneficiary, your paper form will still be utilized. And then kind of the last big, really website change with Epic is you're going to have an updated, we call it a retirement readiness calculator. For those of you that have gotten on the Empower site, you would see that there's like a number that shows up every time you log in that tells you kind of your percentage of being on track to retirement ready. You'll have a very similar type of calculator on the mobile app and on the Epic website. It's super easy to use. You'll be prompted to kind of set up some personal information as far as like compensation. There's life expectancy assumptions. There's rate of return assumptions, and you can override that. And one of the things that I love that Epic does is they have little sliders you can play with. So if you're looking at, you know, how retirement ready are you? How on track are you? Or if you don't feel like you're on track, you can play with the sliders to see, well, how much more do I need to contribute to get myself more on track? Or do I need to change my retirement age expectations? You know, maybe I want to retire at 62, but that's not going to happen. So how old, you know, will I have to be able to be totally retirement ready? And it just gives you the ability to make kind of some real-time decisions that can have a really great impact long-term for you. So those are some of the big changes that are occurring. I think it's also important to talk about what's not changing. And this kind of gets a little confusing because on our not changing slide, we talk a little bit about your investment lineup. Hopefully you all received a notice from your employer as well as directly from Empower on some fund changes. Does that ring a bell to anybody? Did you guys get kind of a notification on some fund changes that are happening in May? Hopefully. There are some changes that we're making internally with Empower before the plan moves over to Epic. So there are fund changes that will occur May 12th. I'll talk about that on the next couple slides. Once those changes are implemented, that fund lineup is going to be the same fund lineup that comes over to Epic. So when we move the plan to Epic in July, there will not be additional fund changes for you. As far as your employer contribution, we're not changing that. I know that's one of the things, whenever there's changes to the 401k, everybody wants to know what's happening to that employer money. We're not making any changes to that. You have a discretionary profit sharing that Petroleum Traders kind of determines how much they pass on to everybody. Everybody gets a percentage. That usually happens following the end of your plan year, which will be sometime after June 30th. So that will continue. And then your advisors will not change. So I get it. We just kind of took over in January, but no further changes for you as far as the advisors. Once we move away from Empower over to Epic, we'll continue to be your resource and your advocate for all your 401k needs. Any questions on that so far? Okay, so let's first talk about the May 12th fund changes, which again, you should have already received a notification both from Petroleum Traders as well as directly from Empower. They sent out a mailer, or if you have email notifications, you would have got an email from Empower. Most individuals here are invested in either the Vanguard target retirement funds, which are kind of those age-based portfolios. You'll see that it's the Vanguard 2030 portfolio or 2040 portfolio or 2050, and then there's the 5-year increment. So most individuals have either that or the model portfolios. Those target date funds are not changing. Those funds are staying exactly the same, no changes. So if you're invested in that, nothing new for you. As far as those of you that are in the model portfolios, SIM, being your old advisor, had 5 model portfolios in the plan. We are changing those model portfolios. Phillips has 6. So I've just kind of outlined what's happening to those existing models. We are mapping them from like to like. The good news is the way SIM allocated your models is very similar to the way Phillips Financial allocates models. If you were in the SIM aggressive model portfolio, that will be mapped to the Phillips aggressive 100-0 model. And so what the numbers mean after the name of our model is just what percentage of that fund is allocated in stocks or equities, which is kind of the more aggressive allocation, versus what percentage is invested in bonds or fixed income, the more conservative allocation. So if you're that aggressive model, you're going to be 100% equities, no fixed income, no bonds. The SIM moderate aggressive model, some of these carry the same name, that maps to our moderate aggressive 80-20 model. So 80-20 means 80% equities or stocks, 20% bonds or fixed income. If you're in the SIM moderate model, that's mapping to our moderate balance 60-40 model. If you're in the SIM moderate conservative model, that's mapping to the balanced 50-50 model. So again, the allocations are staying very consistent to what you previously had. There is one SIM model that is being removed. It's called the conservative model. The last we looked, nobody's invested in that, so that doesn't impact any of you. And then we do have 2 additional models that will be added to the plan, just to kind of bridge the gap between some of the allocations between equities and fixed income. So we've got an aggressive 90-10 model and a moderate 70-30 model. And so no one will be mapped into any of the 2 models. Those are new, but that would be an option after May 12th. If you're an individual that said, well, I'm in the moderate aggressive 80-20. I want to go a little bit more aggressive, but I don't want to be 100% equities. That 90-10 might be an option for you. So those are just some additional options. And that's where you can utilize our office on, am I invested appropriately? Should I be making changes? Should I be more conservative? Should I be more aggressive? That is what we are here for. So feel free to use us to kind of walk through your personal situation. In addition to the model changes, there are some fund replacements. So we kind of looked at your fund lineup, identified that there's a few funds in the plan that are going to be replaced. We're mapping them from like to like funds. So this is just a few examples. The notifications that you receive from Petroleum Traders and from Empower have more extensive information. They have all the funds, but I just put 3 examples up here. So for example, you guys have the Diamond Hill Core Bond in your plan, which it's a domestic bond fund. We are replacing that with the Vanguard Total Bond, which is also a bond. So bond to bond, US bond to US bond. You've got the Vanguard Small Cap Index Fund. That's being mapped over to the DFA US Small Cap Fund. DFA is Dimensional Fund Advisors. So again, it's small cap to small cap. You've got the DFA Real Estate Securities Fund. That's mapping over to the Vanguard Real Estate. So again, real estate to real estate fund. So when we're looking at the replacements, we're looking at mapping. Again, you're going like to like. So you're not going to go from more aggressive to more conservative or vice versa. You're going to be very similarly aligned with your current allocation. The reason we're mapping some of the funds, we've just identified kind of looking long-term performance, a lot of different kind of parameters within the funds. We've just identified that there are some better options that can give you kind of more long-term performance relative to the peer groups for those different fund categories. So those are some of the fund changes that are occurring. One of the really big fund changes that are is occurring, and this is a really important and I think a really good change. Right now, your plan has what's called the Key Guaranteed Fund. There's not a ton of people in it, so some of you might be in it, some of you might not, some of you may not even know this is an option. But right now, within the Empower plan, there is this guaranteed fund, which essentially it's guaranteed regardless of what the market's doing, for the good and for the bad. They're giving you kind of a crediting rate between 1 and 1.5%, which if we consistently had a terrible, terrible market, wouldn't be a terrible thing, but we don't consistently have a terrible market. So that particular fund really isn't paying a tremendous amount for those individuals that are really wanting to preserve their capital, wanting to take, very little risk in the market, maybe nearing retirement, or just looking kind of for a short-term holding place for their money. Right now, we're kind of looking at, all the different alternatives as far as how can we provide a better rate of return for those individuals. And we've identified that we'd like to move those assets into the Vanguard Federal Money Market Fund. The annual crediting rate or rate of return of that fund was 4.95%. So kind of a significant difference for those individuals that are really looking to preserve kind of their account. However, it's a little tricky when we are replacing a guaranteed fund with Empower, or really with any insurance company. So Empower essentially states if you have the key guaranteed fund in the plan, as a plan, we cannot move the assets out of that fund until a 12-month period of time, but it's a 12-month put until that is expired. So that 12-month put was initiated on March, I don't know what date, but March of 2025. So at this time, any individual that has money in that key guaranteed, they can freely move their money on their own. So you all, if you have money in that, you can move that as needed, but we cannot, as the advisors and petroleum traders, as the plan, cannot move that on your behalf, like we are doing for some of the other fund changes. So the goal is, as we move over to Epic, we would like for all the plan assets to come, including the assets in the key. So we are going to be reaching out to all of the individuals that do have assets in that to talk about options. Talk about, is that the appropriate fund for you? If it's not, we'll identify alternatives. If it is determined that that is the appropriate fund for you, we will leave the assets there. But when we move over to Epic, those assets will remain with Empower until March of 2026. And then we will have the ability, after that 12-month put has expired, to move that money out into the Epic plan, into that Vanguard money market. So again, not too many people are impacted by this, but we will be reaching out to make sure those of you that would be understand what's happening and understand kind of the workaround if need be. Any questions on that? Okay. As far as your action items, there really is no required action necessary from any of you. Again, if you have the money in the key fund, there's no requirements, but we're going to talk about additional alternatives. But for everyone else, no required action. And even for those in that fund, there's nothing that you have to do. But as we're preparing the plan, as the plan is going to move away from Empower, get set up with Epic, there's what we call a blackout that will be enforced. And we don't have the dates of the blackout yet. We're working with Empowered on that. Once we have that, we'll notify you and we'll let you know kind of the timing. But essentially what a blackout is just a period of time where account changes can't happen. So you can't transfer your money between funds. You can't add new money to it. So there will be a pause in the contributions just in a short span of time for that blackout. Distributions can't be pulled. So if you're looking to take a distribution from the plan, that's kind of paused during that blackout. It's just a time frame to make sure any transactions in the plan settle, so that everything can come over to Epic at that time, and we don't have any kind of lagging, unsettled fund transactions. So when that blackout begins, everything will settle, and then around July 1st, the funds within your current plan will be liquidated. They'll be wired over to Charles Schwab. I haven't mentioned Schwab yet, but Charles Schwab is the bank or the custodian behind the scenes. So they will actually custody, kind of safekeep the money, and then they work with Epic to reallocate that into the market, into everybody's individual accounts. We'll map that right back into your same investment lineup. At most, legally, a blackout can last 30 days. Pretty rare that we see it last 30 days. During that blackout, it's important to note your money will continue to be invested during the entire time, with the exception of maybe 1 to 2 business days, because there is a time when the money is liquidated and then reallocated that you're out of the market. But it's not for the entire blackout. It's a very short window of time. Record keeping and custodial changes within the 401k space happen all the time. So this is a very common event and common process. There's going to be a lot of eyes on it, a lot of individuals kind of working diligently to make sure There's the checks and balances, and that you're back in the market as quickly as possible. That blackout then will tentatively be lifted, usually within 20 to 30 days at most. I've seen blackouts lifted within 15 days. I've seen them sometimes go that full 30 days. But once everything's up and running with Epic, we've done the reconciliation, we've cross-checked everything, that blackout will be lifted, and you guys will get a notification of, here's your new website, here's the mobile app, here's your login credentials. You can now kind of get in and see that new account information. So that's kind of the process. And again, no major action for you all. As far as Epic, I want to show you kind of just a quick demo of what their website looks like, just so you guys can kind of see the differences between Epic and what you're used to with Empower. I love their website. They have a really great mobile app as well. Let's get this going here. That's it. For the most part, this is exactly what you'll see. There's a few things that are different in the demo, but nothing major. When everything's up and running and live for you, you'll first kind of see on your home sort of dashboard page, you'll see your total account balance versus your vested balance. So vesting would just be how much ownership do you have in your employer money and that profit sharing. If you haven't been at Petroleum Traders for 6 full years, then you're not fully vested in that money. But once you've been there for 6 full years, you should be fully vested, and those account balances will be one and the same. You'll see kind of just the categories of investments that you have. I'll circle back to this retirement goal. This is going to be your retirement readiness calculator. So we'll get back to that here in just a minute. But here's kind of a new change that, again, I think is really powerful for you all. On your home screen and also kind of front and center on your mobile app, here's where you can change your contributions. So every time you log in, you're going to see how much am I currently contributing, whether it's a dollar amount, whether it's pre-tax, whether it's Roth. You can kind of click the little caret if you want to go to where you can modify that. You can toggle between doing a percentage and doing a dollar amount. And then again, here's where you can kind of change it. So if I no longer want to do a pre-tax contribution, I want to zero that out, but I want to do more of a Roth contribution, I can update that. I can click continue. You'll actually get a screen confirmation. Mine's a demo, so I don't get anything here, but then that will feed that data to your HR team and they'll make those updates for you. So again, no more paper when it comes to that. Also, that was kind of from the home screen in that contribution section. But if you go up to all the different tabs at the top to the transaction tab, that also has that deferral change option. So there's a couple different places you can do it in the web. If I go back to the home screen and I kind of keep scrolling, you'll see kind of just an ongoing historical summary of where your beginning balance was when the plan moved over to Epic, your rates of return from that time, whether there's losses, whether there's gains, and your ending balance. So the challenge when you move a retirement plan is you never get the historical data. So unfortunately, we can't bring over your rates of returns from 3 years ago, 5 years ago. I mean, it will start over with Epic, but as time goes on, I think this section will kind of be powerful. So you can sort of just track your overall rates of return from, the time the assets moved over, year to date, 1 year, 3 year, and, so on. Below that, then you'll see kind of your fund positions. You'll see all the funds that are allocated to your account, and you can look at the sourcing as well. So if you're curious on how much money is attributed to what I've contributed, whether it's pre-tax or whether it's Roth, what about how much does my employer put in? Yours won't show a match. It will show, profit sharing, but whatever sources you have in your account will be reflective there. So if I go back to this retirement goal section, you will be prompted to set this up. So this already won't be filled out for you. When you get prompted to set it up, you're going to put in kind of some parameters. Yeah. So your contribution rate will already be built in. So that's just what you're currently contributing. Your income you'll want to build in, because if you're asking, how on track am I? We can't identify how on track you are without knowing what you're trying to replace. So income is really important to make sure you include that information. There'll be some assumptions on retirement date, age. So this is assuming age 67 for retirement. This is assuming a life expectancy of age 85. You could change that. The percentage of salary needed, we call that the income replacement ratio. Generally speaking, most individuals need about 70% of their pre-retirement income kind of replaced to maintain their same lifestyle in retirement. So that will be built in for you. Although if you're like, nope, I need 60%, or maybe you feel like you need 80%, you can change those numbers, and you can reach out to us and we can kind of help assess what's appropriate for you. There'll be some assumptions on your rates of return. So generally speaking, while we're working, while we're in our accumulation phase, we should be a little bit more aggressive. So we would expect to have higher rates of returns while we're working. When we're in retirement, certainly the goal is not to cash out all your money the day you retire. You want that to continue to be invested and continue to be working for you. Although many of us go a little bit more preservation mode and a little more conservative in retirement. So typically would expect lower rates of return while we're in retirement. You can build in, income, growth, cost of living adjustments. You can include inflation. You can include Social Security. That's automatically included. But if you want to take Social Security out, you could zero that out, or you can kind of put your own estimate. If you have other accounts, so maybe you have a Roth IRA or a 401k from an old employer, maybe you want to add spousal information, you can build that all in to kind of get your total, package, your total summary. And then every time you log into your account from that home screen, it's going to tell you the dollar amount that you're on track to have and the dollar amount you're on track to need. And then it will break it out over in this section on what does that look like from a monthly perspective. So how much income is that going to generate for me monthly, which sometimes it's easier, sometimes it's easier to look at monthly versus the total amount to know, like, can I live off of that month to month? Like, does that seem reasonable? And, when you're looking at these, you're always going to kind of see the numbers on what percentage are you on the way to a goal of being 100% prepared and ready for retirement. And if you're looking at that and you're like, gosh, I'm not where I want to be, that's where you can play with these edit sliders to see, well, what if I increased my contribution? What if I went from 9 to 10%? Or what if I went up to 11%? Okay, that gets me, 99% of the way to my goal. Or like I mentioned earlier, what? We all may not want to work till we're 67. So what if I want to retire at 62? Ooh, gosh, I'm really not on track to do that. And for this example, it's because my Social Security doesn't kick in until 65. So, gosh, I got a lot of things to make up if I want to retire earlier. How much more do I have to contribute? And is it even feasible for me to get there? So this just gives you that ability to have kind of real-time projections to identify what more could you be doing now to get yourself kind of more on track. Other things that you can do, if we go to the transaction section, here's where you could change your investment elections. So I could update where my new money's going. You could transfer between fund to fund or model to model. Any distribution options that are available to you based on your age, based on what your plan permits, will be listed. So if you ever need to request a distribution, you can do that from the website. If you go to the personal section, here's where you can update beneficiary. So you can add your beneficiary, or, if you add one and years from now you need to change it, this is where you can modify it. So website's pretty easy to navigate, but with our advisor access, we have the same access that you guys have, and we have the ability to transact. So if you're like, I know I want to make these changes, but I don't want to, I don't want to screw it up. I want to make sure I'm doing it right. You can call us. We can help with deferral changes. We can help with fund transfers and transactions. We can help with distribution requests as well. So we can kind of do it all. So that is the Epic demo. And then just a few more minutes since we've got you, we want to talk a little bit about kind of education. And let's talk about some of the benefits of the plan and making sure you guys are maximizing the benefits. And I'm sure all of you want to retire someday, right? And when we think about kind of what I've mentioned with that retirement calculator, what do we need to do to get ourselves on track for retirement? We know retirement can be expensive, and generally speaking, I mentioned that 70% income replacement ratio. We've got to outline 70 to 80% is kind of roughly what we need to replace our income by. And so when we think about where that's coming from, about a third of it comes from our Social Security, and that's what it looks like today. But the other 2/3 comes from kind of our personal sources, our 401k plans, our IRAs, pension, if we have pension from, prior employers, and just kind of all of our personal savings. So that's kind of the bucket that we really need to focus on within the 401k plan. As far as how much we need to retire? This is a common question that we typically get. And I would say it used to be advisors would kind of just throw that blanket statement out that everybody needs $1 million to be set for retirement. And that's really kind of inaccurate because it's all a functionality of what we're accustomed to living off of and what we're earning. So we like to break it down so that you can kind of identify, personally for you, where you need to be at different age milestones to make sure you kind of are aware of how on track or maybe off track you are. And so generally speaking, by the time we're 67 or kind of normal retirement age, we need about 10 times our annual salary to be set for retirement. So if you were earning $100,000 at age 67, we'll do dummy math here for me. You need $1 million. You need 10 times that number. So if you're at 100,000, that's the maximum salary you've ever had. $1 million is about what you need. If you're earning more than that or accustomed to living off of more, you're going to need more than $1 million. If you're accustomed to living off of less, you get by with less than $1 million. So we look at your different age milestones and the multiple of your salary you need saved at those milestones. I plugged in just a $60,000 annual salary. So these numbers don't necessarily mean anything to you. You can plug your own salary in and kind of figure that out. But by the time you're age 30, ideally you want 1 times your salary saved at the age of 30. By the time you're 40, you want 3 times your salary saved. By the time you're 50, you want 6 times. By the time you're 60, you want 8 times. And by the time you're 67, again, you want that 10 times. So if you're looking at this and you're like, okay, well, I'm not quite there. Again, we are all about kind of setting reasonable expectations, right? There's unfortunately no magic to the stock market. There's no, hey, we're going to put you in this fund and you're going to make millions of dollars just like that. It is all about consistently saving and kind of taking advantage of the benefits that are offered to you. So in general, individuals should be saving between 10 and 15% of their kind of global family income into some sort of retirement bucket to really be on track. So if you're looking at this chart, you're finding your age milestone, you're plugging in your multiple, and you're like, gosh, I'm not there. Let's think about how much are you currently saving in your 401k or any other investments. And if you're not at that 10% threshold, that's where we need to nudge you a little bit. That's where you might need to be a little bit pushed to start to increase those contributions. And that's the great thing with Epic, with the website and the mobile app. Once that's all up and running for you in July and later on, is you can change that on the website. So you can kind of stair step your way up. So if you're at 3% now and you're like, gosh, I know I need to do more, you can bump yourself up to 4%. Let a couple pay periods or months or a quarter go by and identify like, hey, am I able to live off of kind of my new take home pay? Is this feasible for me? If it's a struggle for you, you can always drop it back down. You can kind of always go back to what you're doing. And if you're looking at this and you're like, I'm not on track and there's no way I can put another dime in this plan, then that's when you call us. Let us help you and kind of assess what you're doing, how we can kind of make it more effective for you. That's our job. As far as investments, so let's kind of talk about the fun, volatile investment world. I'm sure you guys have been kind of watching the news and paying attention to all the volatility in the market. And this kind of shows you, I know it's hard to see, particularly in the back. You don't have to necessarily be able to read it, but I'm sure you can see the colors. This represents the last 15 years in the stock market, kind of year by year, starting in 2010 all the way through 2024. And each one of these colors represents a large kind of major asset class, whether it's large cap, whether it's mid cap, small cap, international, real estate, bonds. We've got international bonds and US bonds. And so at the top are kind of the better performers year by year, and the bottom are the worst performers. And so it's really hard to look at this chart and say, based on historically what's happened, I know the order for 2025. I don't play that game. My company doesn't play that game. From time to time, individuals are going to get it right, and they may say, hey, large cap growth has been really strong. I think large cap growth is going to be really strong in years to come, but sometimes that's not always the case. If we look at 2017, for example, the orange emerging markets, that was the best performer in 2017. So if I'm an individual and it's October of 2017 and I'm like, I don't know, where should I put my money? Man, this fund or category of funds has been really, really good. I'm going to put all my money in there. That went from best to worst the next year. And so now if I'm in that fund and I'm like, oh, I just lost a lot of money. Gosh, maybe I picked the wrong fund. What else should I be picking? Well, gosh, bonds have done really well, so I'm going to put all my money in bonds. And so that goes from best to worst. And more often than not, we see the winners drop to the bottom. We see the losers kind of rise to the top. And so what we know is that diversification is the most important component when it comes to investing. It's not timing the market correctly. It's not picking the right fund. It's making sure you're super diversified in all those categories. And when you're super diversified, no matter what the market's doing, you're always going to have a winner. And that certainly helps kind of build and boost your account. But you're always going to have a loser or an underperformer. And individuals for sure are uncomfortable with that. But when we think about why it's important to have kind of those underperformers, think about how we buy everything else when it's our groceries, our gasoline, a car, you know, whatever it is that we want to buy. We like sales and discounts and coupons and, you know, percentages off. And that's how, as a consumer, we buy. So when the market is dropping and there are funds that are performing worse than other funds, that's a buying opportunity for our 3% or our 10% of whatever we're contributing to buy more units or more shares kind of at lower values. And then because we know winners rotate, so we know it's not always the same fund or type of fund that's always dead last. It's not always the same fund or type of fund that's always the best. Because they rotate, we know eventually some of those underperformers will kind of rise to the top and vice versa. And that is what is incredibly important long-term for your investment returns. So when we think about how we diversify, how we do that in your plan, you guys really have a lot of different options to make that easy for you. You have those target date portfolios, which kind of force you to be super diversified in those age-based options. And then this is just kind of a snapshot. Again, I know it's kind of hard to see of the model portfolios that Philips offers. So these are the 6 models that are kind of replacing those 5 sim models. They range from more conservative and a balanced model to really aggressive 100% equities in that most aggressive option. And then you've got 4 in between. And these options will force you to be super, super diversified no matter what the market is doing. And the good news about the market, although we don't know how long it's going to take for the market to kind of come back, but the market always does. The market always recovers. The unknown is it 3 months from when kind of the market started the volatile cycle? Is it 6 months? Is it a year? Is it a year and a half? How long? And so again, that's kind of where it's super important to understand how comfortable you are with the volatility, what's your market risk, what's your time horizon. And if you're kind of not sure how that works, that's when you reach out to us and we can kind of help work through an allocation for you and make sure you're set up appropriately for your situation. So that's really everything that I wanted to go through. Again, you know, we've got some fun changes coming in May. We've got the plan move away from Empower over to Epic. That should be happening around July 1, but we will communicate. You'll get the blackout notice. You'll get more notices on those changes in the timing. And for those of you that do have money in that key guaranteed fund, we'll be reaching out directly to you to kind of work through some options. So any questions from you guys? Yeah.
Let's say we're all got our stuff in like specific funds or whatever. Is there a way to set up like specific companies that we do or don't want?
Not in this plan. And typically you can't do that in a 401k. So in your 401k plan, you have the ability to invest in mutual funds, which are portfolios of, you know, hundreds of different companies kind of built into one fund. So maybe it's a large cap mutual fund or a mid cap or small cap. We don't have, and you don't have the flexibility to choose the specific companies. That's typically something you would do in like a brokerage account. So if you're like, I want all my money in Walmart, or, you know, I don't want any of my money in, you know, whatever company, that, yeah, investment rank, which is in the S&P 500, a pretty common fund, right? So you don't have that functionality within a retirement plan. Now, if there's a specific company like Tesla, for example, that you're like, I will not invest in that, then you certainly can reach out to us and we can look at the fund lineup to identify which funds do not include it to make sure that would kind of work for what you're looking to do. What else? What other questions?
How will you be contacting the people that have money in the guarantee?
Yeah, great question. So we're leaning on Glenn and Jen to help us. Is there a phone number? Is there an email? They might reach out first to say, hey, you're on the list. Philips is going to contact you. How do you want to be contacted? Okay. Yeah. So that will probably be over the next couple weeks. What else? What other questions? All right. Well, thanks for trekking over to our office. Again, we're super close, obviously, so you can call us, you can email us, you can stop over if you ever need to do a face-to-face. We're in and out a lot, so it's best to kind of call and make it an appointment, but we are happy to help and, you know, be a resource for you. So super excited for these changes. I think they'll really work out long-term to your benefit, and certainly keep us posted when there's questions. Thanks, guys.
Thank you.
Thank you.
Drive carefully for the road.
Yeah.